Hi, welcome back to our YouTube channel. We have a very important topic to cover for today's session. Now, our topic for today is how to cut loss using stop orders. As you understand, in trading, cut loss is definitely a must. Any products categorized as under trading, cut loss is a must. And second thing, when it comes to trading products, right, because of the market volatility itself, stop orders becomes an important order types that you need to understand and you must use it. So today we are going to cover both. One is cut loss and the part is how do you use stop orders to cut loss. Now, technically for your understanding, stop orders, there are many usage. But today, our focus is mainly in terms of how to use stop orders to protect your losses, to cut your loss only. The rest of it, maybe in future, we can cover in other topic as well. So today, I'm going to teach you a very simple method of how do you place a stop orders. Because I noticed that many beginners or even some traders, after many years in the industry, right, you might still find that placing a stop orders, it will be a challenging job for you. So today I'm going to use a very simple trade and easy to understand example for you to understand how to place a stop orders to protect your losses. So without further ado, let's start with our session for today. As usual, if this is your first visit or this is your first video, please remember to subscribe to our YouTube channel and on your notification bell. My name is Ting Ting. Let's start with our session for today. Now, as usual, we are going to do a disclaimer. Today's session is only meant for education purposes only. There's no buy or sell call. Now, let's start directly with the actual trading platform. As you know that my usual topic, right, I like to cover the actual scenario rather than theory more. So apply to Malaysia trading platform, you can see that actually there are many different order types. But when it comes to stop order, very simple. First thing, in the order type, you just need to select stop orders. Can you see that? You must select stop orders. Now, some of you might ask me this question. Let's say, for example, I forget to change it to stop orders, right? What will happen? Now, this is the common question that people will ask me. But rather than I'm letting you to understand, if you did not change it from limit orders to stop orders, what is going to happen? I'll rather let you discover or experience by yourself. Then you will remember very well. So you can test it out then, or else you can convert from the theories that I'm going to cover for you, right? And you compare it with the limit orders, then you will know. If you forget to change from the default order type, which is a limit orders, to stop orders, what will happen? So this one, I would rather leave it for you to experience by yourself, to discover by yourself. Now, first thing, remember when it comes to stop orders, you must remember in the order type, you must change to stop orders, rather remain it in limit orders. Let's understand what is exactly a stop orders. So technically, I'm going to divide this definition into 3 keywords. So you just need to memorize these 3 keywords, then automatically you'll understand how to place a stop orders and what is exactly a stop orders. So what are the 3 keywords? The first one is trigger, second is sent to the market, and the third one is next best available price. Now, you don't need to understand how it works. You just need to remember about these 3 keywords. Later, I'm going to show you via an example, so it's easier for you to understand what does this mean by triggered, central market, and next best available price. So these are the 3 keywords. Now, I'm going to show you this particular common scenario, which is normally we know that we need to buy low, sell high. So when you place an orders, you notice that you always place a lower buy orders compared to the current market, and when you sell a contract, you normally place at a higher price. This is common because we are going to do in this way. For example, when I wanted to sell my car, definitely I'm trying to sell as high as possible. Am I correct? When I wanted to buy something, definitely I wait for sales, for promotion when the price is lower. This is the common understanding. But when it comes to stop orders, you must understand when you place a buy stop orders, normally will be the other way around. Meaning when you place a buy stop, it will be higher than the current market price. And when you place a sell stop, it will be lower than the current market price. The other way around. Why? Now, please pause the video and give it a thought before I reveal the answer to you. So I repeat, please pause and give it a thought. If you are able to come up with the answer, then you are really very good. So I just give you a hint. Technically, for stop orders, you will need to place a buy stop, which is higher than the current market price, and sell stop, which is lower than the current market price. Why? I'm going to explain to you from the subsequent two examples itself. Now, when it comes to placing a stop orders, through my experience of teaching new traders for the past more than 15 years, right, I find that many people find it very difficult and challenging when placing a stop orders. Sometimes they are not sure whether should I place here, should I place there, and what should be the trigger price, will it be higher or lower, whether should I place a buy stop or whether should I place a sell stop, and whether the trigger price should be lower or higher than the current market price. But trust me, I'm going to introduce a very simple way for you to identify how do you place a stop orders and whether should you place lower or higher price. Now, in secondary school, we used to understand about y-axis. Am I correct? So let's say, for example, your price is 0, then when you move towards upside, your price is getting higher. So today, I'm going to use this method for you to understand. And through my experience, after so many years of teaching, right, I noticed that many of the beginners told me that this method is really very easy for them to understand. So I guarantee you, when you use this method, right, in future, you will not face with any difficulty or challenges when you are going to place a stop orders. It doesn't matter whether it's a long buy stop or whether it's a sell stop. So today I'm going to show you two examples which is the long buy stop orders and also another example which is the sell stop orders. So I hope that after today's session, you understand very well. So for example, let's say you buy one FKL contract at the price of 1529. Let's say, for example. So first thing, we need to understand, let's say you bought the contract and subsequently the price went higher. So are you supposed to make a profit or are you supposed to make a loss? So definitely your answer will be a profit. Am I correct? If I buy something and subsequently the market went higher, definitely I'm going to have a profit. So this is definitely a profit. So when you're having a profit, then technically you don't need to worry. So let's say if I bought the contract already and subsequently the market start to drop. So when the market start to drop, that's the part that I need to worry about. Am I correct? So when the price start to drop, I know that I'm having a loss. Correct or not? You buy higher, then subsequently you need to sell lower. Let's say, for example, today you bought a car at 40,000, eventually you just managed to sell your car at 10,000. Definitely it's a loss. So when you're having a loss, that is the place that I need to put a stop orders. Am I correct? So first thing you need to understand, when you put a stop orders is whenever that there's a potential for you to suffer a loss. That's the place that you need to put a stop orders to protect your losses. So let's say the market went against you, right? Then there's a stop orders that's going to protect your losses. So first thing you need to understand, losses part definitely is the place that we are going to put a stop. Then second part that you need to understand is, because this is a buy order, if you want to close a position, this is definitely a sell order. It's going to be a sell order. You know why? Very simple. When I buy a contract, there are two ways for me to get out from market. Common. First is when I'm having a profit. I can close my position by selling a contract. Now, second scenario is when I'm suffering loss, I also need to close my position. I need to limit my losses. I cannot get my losses uncontrolled. So with that, when I want to close my position, I also need to sell a contract. So definitely this will be a sell stop orders. So for example, stop. I want to limit my loss 9 points. So you can see that I'm going to put a sell stop orders at the price of 1520. So still remember, just now I mentioned to you 2 things that you need to take note. One is, if this is a buy, this is definitely a sell. Second, when you put a stop orders, it's definitely at your losses part, which you need to cover your loss. As I mentioned to you today, the stop orders is purely for using it to cut loss. So I'm going to explain in terms of cut loss perspective only. Like stop orders, actually you can use for other perspective as well, other usage as well. But today I'm not going to cover this. So easier way for you to understand, you can see that this is a sell stop. And do you notice that this is what I meant? Current market price, let's say for example, is at 1529. But when you put a sell stop, it's below the market price, because that's the place that there's a potential for you to suffer loss. That's why you need to put a sell stop. Understand? So when you have this sell stop one contract of FKLI at the price of 1520, technically you are limiting your loss to 9 points. So for example, if each point is 50 ringgit Malaysia, so 9 times 50 is technically you're going to limit your loss to 450 ringgit Malaysia. So this is the whole concept about putting your loss. Clear? So I believe the explanation when you draw this XY axis is easy for you to understand. Now from this example itself, I'm going to explain just now the 3 keywords: triggered, sent to the market, next best available price. Look carefully, I'm trying to explain to you. Just follow my cursor. So for example, I bought a contract at the price of 1529. Then if the market start to move higher, I'm okay because I'm making a profit. If the market start to drop, once reach 1520, my stop orders will be triggered. First keyword, triggered. It will be sent to the market. It will give me the next best available price. So reaching 1520, then only my stop will be triggered. Then it will be sent to the market and it will give me the next best available price. So prior to that, these particular orders will not appear in our screen, the buying and normal buying and selling quotation. And once traded, it can be 1520, it can be 1519, 0.5, 1519, etc. Now, looking at short orders, subsequently, if you can replay. If you try to understand and you try to digest, right, we can replay a few times for this particular video. And trust me, when you're using your XY axis, then it's easy for you to understand exactly where do you put your stop orders. Now, coming to the short example, when you are selling a contract, you start by selling a futures contract. Again, you're using the XY axis concept. So let's say, for example, you sell limit contract 1 FKLI at the price of 1750. Now, when the market starts to drop, you're having a profit. Am I correct? When you sell high, then when the market drops, then you're definitely having a profit. That's the place that you don't really need to worry. Actually, when you're having a profit, you also need to worry. But it's just that we just focus in terms of losses because this is our today topic. Now, if you sold a contract and subsequently when the market moves higher, then that's the place that you are going to suffer a loss. So if you are going to suffer a loss, definitely you are going to put a price which is higher. You are going to put your stop orders. Am I correct? Again, because this is sell, how can I close a position? Because cutting losses is also part and parcel of closing a position. So since this is sell, definitely opposite of it. So this is definitely a buy. So this should be a buy stop. So first concept, you need to understand when you are suffering losses, that's the place that you are going to put your stop orders. When you have a potential loss, you are going to put your stop orders. And second part, since this is a sell position, so when you want to close a position, definitely it's the opposite. So in this case, you are going to have a buy stop. So I hope that with this explanation to example, definitely you understand well when are you going to put your stop orders. If you do not know in future when you are in the actual trading environment, you can start to draw this XY axis. Trust me, I guarantee you will be able to know how to put this buy or sell stop. We have many feedback from our graduates also they told us that this is easy for them to understand rather than normal memorizing it. And you can see that in this case, right, technically I've limited my loss to 10 points. So 10 points times 50 ringgit Malaysia, which is 500. So you can see that this is the scenario. Very simple and very easy for you to understand. And do you notice that this is higher? When you buy stop, you're buying higher than the current market price. Again, applying the 3 key definition. So let's say, for example, you saw at 1750, when the market went higher, once reached 1760, your stop orders will be triggered. It will be sent to the market and they will give me the next best available price. So it might be 1760, it might be 1760.5, it might be 1761, etc. Now, this is the actual scenario. I'm going to show you how do you really execute in your trading platform. So for example, I bought a contract at 1529. You can see that this is a buy contract. I use a limit order at the price of 1529. Subsequently, let's say for example, I want to limit my loss to 9 points. So let's say I put a sell stop at the price of 1520. How does this work? For example, I put a stop orders, order type, I need to change the stop orders, and my trigger price is 1520. So I'm going to put a sell order stop 1520. So meaning what? If I bought at 1529, if the market start to drop, reaching 1520, my stop orders will be triggered and it will be sent to the market and they will give me the next best available price. And technically, I'm limiting my loss to 9 points. I hope that today the session, right, is really very helpful, especially in future. If you do not know how to set your stop orders, right, please remember you can draw your XY axis and I guarantee you that you will know exactly how to place your stop orders without hesitation. Thanks for your watching, and remember, before you go, please remember to like our YouTube channel and also subscribe to our YouTube channel and like this particular video. I'm going to see you in our next video. Bye bye.